Hi, this is Christian Dye from Latitude West Financial. I wanted to give a brief description of my financial practice as well as how it differs from other financial practices. So, my business model is very similar to a traditional financial practice. I'm licensed in investments such as RSPs, TFSAs, non-registered, as well as insurance such as life, disability, critical illness. And what makes our practice similar to other practices is our ability to do planning, investments, and insurance. What makes us more unique is on the right side of the quadrant, it's our planning with corporations. We deal with a lot of physicians, dentists, business owners, as well as young families. But a lot of times they're trying to figure out taxation, tax minimization, as well as wealth transfer. And what makes us absolutely most unique is our pro real estate investments. So the real estate comes in two forms. One is active and one is passive. A lot of people try to build a real estate portfolio. They have a real estate portfolio and they, of course, want to expand this real estate portfolio. So a lot of the differentiator is actually in us able to advise on the real estate that they currently own, encourage that they buy more, and show them the highest and best usage of those strategic assets. Our investment approach is based off of my first book, which is called Break Your Wealth Ceiling. So, we expand beyond your wealth ceiling through strategic asset advisory. What that means is if we were to take what you are doing right now, such as making a certain amount of income and investing, let's say 20% of that income, and you were to receive somewhere between, let's say 7 and 10% of those investable assets as a rate of return, then we can calculate based off of your age as well as your investable years, basically what your wealth ceiling is. What is the amount that you will, what your net worth will be. Now, what we do is we do strategic asset advisory to break through that ceiling. And essentially, we do that through cash flowing assets such as real estate. So we're planning driven, looking specifically at assets that you would be building up and advising you on it. Now, we're not realtors, so we can't buy or sell any of the real estate, but what we are able to do is very unique. We're able to find it. And we're able to analyze the properties that you yourself are interested in order to do a few things. One is in order to help to advise you if it's the wrong property, to help to advise you to not purchase it, and if it's the right property, to help you make an informed decision to purchase it quite quickly. So that's sort of one tier level of our service. Another tier level is if we were to actually find the real estate for you. And that's because we have relationships across Canada, as well as the US and, outside of North America with investment focused real estate, usually off market deals. So we're planning driven also in understanding how to minimize taxation. So we're either saving you money through taxation, through our advice. We have an internal tax team, or through purchases such as whether they be public, private, or real estate assets. And then we take a look at your goals to figure out what it is you are trying to achieve, and we work backwards. Maybe you're trying to retire early, maybe you're trying to transfer the majority of your wealth to the next generation or the next two generations, maybe you have philanthropic endeavors. So what we do is ensure that everything aligns with your goals as well as your assets. So our services, we build exponential wealth through strategic cash flowing investments. So cash flow is very, very important to us for retirement as well as for an investment class. So we do financial planning, which would be cash flow, retirement, taxation. We're able to invest client money in the public markets, such as with ETFs, in the private markets, such as exempt market dealership, real estate assets. Basically, our license allows us to do both public and private equities, as well as we're insurance licensed, and insurance can be used as a tax savings asset class, either corporately or personally. In the form of real estate, we have a product shelf of REITs, EMDs, off market, and those are what we could provide passively. actively, a lot of people are already investing in real estate, but what they're having trouble doing is finding really good deals. So you might sort of, classify as A list, B list, C list, and D list. Sometimes people are holding on to a property and they have no idea if it's a good property or not. What we're able to do is to analyze this to say, as a scorecard, what is this property and what is the reasons why we would create it this way. So, to give you an example of real estate, a lot of people invest in real estate on their own. So, if you were to invest in real estate on your own and you were to live here in the lower mainland, then it would not be hard for you to find a realtor who will sell you a piece of real estate. So, I'll give you an example of one. $2.6 million Vancouver house. This easily you could find on your own. This house will generate around 5,500 per month in rent. It's a four bedroom, three bath. Now, with a 30-year mortgage at today's rates, 20% down payment, your total investment would be around 526,000. Now, if we were to analyze this property for you, we would help to determine three things. So we don't believe in real estate as location, location, location. We believe in cash flow, cap rate, and the internal rate of return. So right away, we notice that off 20% down payment, this property is very, very heavily negative cash flow. That's because, of course, the mortgage is so high. So it's negative 6,000 per month in cash flow. The internal rate of return is 10.96, which isn't too bad because Vancouver does appreciate quite well. But we would want a much higher rate of return. The stock market, on its good years are returning higher than that. And the cap rate is a metric that we use to compare one property to another. We want cap rates above 4%. This cap rate is below 2%. And if you're not familiar with cap rate, it's essentially net operating income divided by purchase price. So we want this number to be as high as possible, where the net operating income is to be quite low. And the net operating income, we want it to be high and we want the purchase price to be low. So in general, I would classify this property as a D property. Okay. So what are some of the properties we have either found for our clients or have helped our clients to have purchased last year in 2025? To give you a sample of the relationship we have with builders as well as investment-focused realtors, I'm going to show you a couple of samples of just what we've done in the last 12 months for our clients. This one was in Nanaimo, BC. It was for 669,000. We suggested that they secure the deal with by doing an over asking deal because it was so good. They took our advice. The property only had one suite. We showed them how to turn it into two suites. With the two suites, we can get $4,200 per month off of a 20% down payment. That's a total of 152,000. So here we've got a cap rate well above 4. We have an internal rate of return based off of 20 years of 15%. So that's an annual 15% rate of return based off of their investment. And the annual cash flow is $8,000 off of year one. So this would be an example of A-list investment that we helped our client to secure. We would show them how they would the rate of return based off of the year that they exit the property, whether it be year 10 or year 20, or if they held it on forever. It would show them the cash that they would receive, as well as the rate of return and the cash on cash return if they were to hold it forever. Another unique thing that we would do is a sensitivity analysis. The sensitivity analysis allows us to give us a range of what if we got really low rents compared to really high rents. What if we got low value appreciation on the property versus a high one. That way, in the worst case scenarios, if the deal still makes sense, then it can be an informed decision for the client. We do a lot of work in the prairies with the relationships we have with the realtors. Now, what an off-market deal means, it means that it's not on the MLS. It means that you more or less have to have a relationship with that realtor have done business with that realtor for them to even show it to you. It's because the deals are very good. They don't want other people to tie them up, especially if they don't know them and they're not sure if they're going to close on them. They say the seller saves an enormous amount on fees by selling it off market. So we've done multiple off market deals because of the relationships we have. So this isn't a good example of one. This is a house with two suites in it. It was sold for 500,000. That was found by us. It got rent of 3,800 per month. The total investment was 106,000. And again, we had a strong cap rate, a strong rate of return, and a strong cash flow. For our corporate clients, we highly encourage them to buy multi-units. So here is a $2.6 million nineplex in the prairies that we also found. This property was pre-construction, so it was brand new, which means it comes with a warranty. So here in Vancouver, as we've shown, we can get it wouldn't be hard to find a $2.6 million house that rents for 5,500. Maybe this house on its best day might rent for maybe 7,000, maybe if it had two suites in it. But if you compare it to what we were able to find, we've got a nineplex for the same 2.6 million, and this one generates 15,000 per month. We have positive cash flow. We have a very strong rate of return as well as a very strong cap rate. Now, one of the relationships that we also have is we know the best way to finance these properties. So typically you would put a 20% down payment on multi-units, even as high as 30 or 40% down payment. Through the relationships that we have, we were able to finance this at 10% down payment, which of course heavily improves our rate of return. Another 10-plex out in Alberta for 2.75 million, a total of 335,000 total investment. Now this rental income is very strong, 18,500, and again, strong cap rate, strong cash flow, and strong rate of return. So that's a quick little snapshot of the type of real estate that we've just done in 2025. We have no doubt that 2026 will be very similar, especially with what we are finding, as well. And deals continue to even get better if we look outside of country. Our process typically starts with a discovery meeting that is meeting with our client, figuring out what their goals are, figuring out what they're trying to do. We would also, typically analyze everything that they're investing in the public and everything they're investing potentially with their real estate. And then in our navigation meeting, we would basically summarize all this for them. We might encourage them to buy more property, especially if that's what they're doing. We would show them the best way to fund it with their current assets. We would take a look at their existing real estate to say, you should keep this, or you should you should keep this long term, or you should just keep this short term, or you should get rid of this as fast as possible. And then we would implement a strategy in order for them to help to execute. And then, of course, we would do a review with them periodically. We're focusing on making sure that they're on track for retirement. We would break down all of their different asset classes. We would give them about a 35-page report as to the planning and the retirement planning. We would show them their net worth over time, especially if they were to do it essentially without us, the status quo. And we would say, this is the trajectory that you're on right now. Then we would add on if work with us, buy, better quality real estate or expand into a more diversified portfolio. We would show them again what their net worth would then look like. We kind of give everyone a financial scorecard. So what is your financial health status? Perhaps it's very strong. And how can we add upon that? This is sort of the whole idea of the break your wealth ceiling. We sort of show them where their ceiling is at. We show them with our strategies, with better real estate, what that might look like as well. Now, of course, if their health status is poor, we would show them also what they need to do in order to approve it. So that's a really quick snapshot of what we do and how we're a little bit different. So a lot of traditional advisors do a very good job, but they tend to stay in the public stock market. So they will do index funds, they will do ETFs, they will pick individual stocks. They will either try to mimic the stock market or try to beat the stock market. That is not what we do. What we do best is we take a look at existing assets, using real estate in order to, completely do significantly better in the long term. So we're trying to create generational wealth. And by generational wealth, you have a lot of assets that are cash flowing, such as real estate, so that you don't have to deplete them in your retirement. Instead, you could actually live off of them and then pass them on. So I hope all of this makes sense. If there's anything we miss, then by all means, reach out to us. And we'd love to meet with you in order to have a little bit of further discussion. I'm sure you've got a lot of questions, such as what are our fees? We're fee for service, which means that very transparent, much like an accountant or much like a lawyer. We are paid a fee for the service that we are doing, and it all depends on our level of engagement, the amount of times that we're meeting per year, the amount of things that we're doing for you, such as are we just analyzing your real estate, or are we your real estate, your investments, your retirement planning, or are we actually adding on to it, such as finding you properties, such as, finding you better opportunities. So our fees do range. But I think the best thing to do is to set up a call if you like what you've heard, and then we can go further to discuss more about how we could work together. So thank you guys for listening.